Hello, traders. Happy Monday. It's 8:02 a.m. Chicago time on the 13th of May, 2019. Thanks for joining. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Hang on, I'm getting feedback. Just need to turn my headset down. It's a constant adjustment with the sounds. One second. Test. Okay, that's better. Sorry about that. So where are we this morning? We are trading lower, risk off, very clearly risk off. The Japanese yen, gold, the bonds, the 10 years, the euro, and the cable, as well as the Bund, are higher. And the laggard this morning is just the NASDAQ getting obliterated here, 2.6% down from Friday's settlement. The NASDAQ is likely to suffer the most, apparently, from this tariff stuff. I think I read this morning that Apple's down about 9% as it relates to these tariff issues. And other techs are feeling the same heat. So the Nasdaq's down 200 points. The S&P's down 2%. Down 58.5 points. Big run up in the S&P, and we're here testing last week's lows. The low overnight's 28.27 and a quarter, and we're trading at 28.28 and a quarter. We're 4 ticks higher. This tariff issue doesn't look like it's going away. China says it's going to raise tariffs on 60 billion of U.S. goods on June 1st for 25% in retaliation for Friday's tariffs kicking in. It's raising those tariffs on about 2,500 U.S. items, and approximately 1,100 more items are subject to 20% tariffs, and so on and so forth. It will not raise tariffs on U.S. crude oil. So crude is actually up. It's at 62.67, up 1%, 1.64% or $1, and it's on heavy volume. The overnight volume so far has been higher than usual. It's about twice, and overall, the market's just not responding well to the fact that this is not going away. Now, we knew coming into the weekend that there was going to be some effect from the news carrying into the open. It was a very, very quiet open last night in the futures, and then it started to drift lower. After about maybe an hour or so, 2 hours, and then it has taken a couple of hits, and I'll show you the heat map for that. So that's where we stand. In addition to that, because tariffs are hitting farmers pretty badly, POTUS has requested $15 billion in subsidies to farmers to offset those tariffs. So it's taking it out of one pocket and putting it into another and stressing people out, really, this war. But I don't know. I can't say I would have a better solution. I'm not sure. Anyway, that's where we stand at the moment. So clearly risk off this morning. You got to keep that in mind as we move into the session. On the calendar today, nothing really big. We have Fed's Rosengren speaking, and we have Fed's Clarita in about 4 minutes. We have the NAB Business Confidence for Australia at 9:30 p.m. Eastern, and we have continuous flow of news, I'm sure, throughout today as the heat of this battle is ongoing with this trade war. So just pay attention. Today's the kind of day, again, as I said on Friday, to not be stubborn with your positions. If it doesn't work for you, just take your hit, take your loss, and move on. Let's take a look at what we expected on Friday. So those of you who attended Friday, we walked through what was expected. The expectation was for the market to drift lower, to find buyers again. Expected buyers around 28.45 to 28.50. The market closed clearly bullish on Thursday, but gapped down a little bit on Friday. The expectation is we would test down and then look for a push into 28.83.50 to balance, and then 28.93 to 2900 as a push, as you can see on scenario 1 with that arrow there. The secondary scenario is that it's responsive immediately up towards the close, finds sellers, and then starts drifting down towards 28.44.50, a likely inside day. Now, scenario 1 worked. However, the market dipped way down. Let's clean that up. Market dipped way down and took out to 28.36 low Thursday. That was not expected. As much as 28.44 was expected on scenario 1, but look at where it ended up pushing. It pushed to 28.93 at the top. That's the first expected area. Where does that come from? It comes from the high volume node that occurred there Tuesday and then was overlapped on Wednesday. In fact, Wednesday's profile is just an inside or miniature version of Tuesday's profile, but 28.93 was an important area, and we ended up having that as a top. The auction remains pretty orderly despite the news, and also note where this retest, well, I'd put that in a little high here, where this retest is on the close. You'll see that the pullback into the close was that around that 28.77 area. We tend to overshoot prices. We tend to overshoot prices in a thinner market. So that's what happened on Friday. We had a kind of a bullish engulfing day. We took out the low, we took out the high, the low, the high, and we ended up finishing stronger. So again, we came back with a strong finish, and then here we are trading near the lows of that. Let me turn everything back on here. Okay, so then we carry that into the reopen. So here's the reopen. We gap way down. We reopen at 28.58.50 from a close of 28.86.75. So we're down approximately 30 points or so already. We hold steady at the beginning, as I talked about, and then once the Asian markets open, we dip down and we hold sideways for quite some time, and then we start to really sell off with the Europeans as they come in. Sell, pull back. Couldn't get couldn't get VWAP there for a continuation down, and we are trading at the lows currently. So pretty bearish in the overnight session as well. Look at the profile, pretty elongated. Price discovery just ongoing. Very active price discovery down. Delta is down. Inventory is 100% short on the overnight session, and so overall not looking so peachy for the longs. The only way these longs are likely to find some relief, given the way this is setting up, in my opinion. Of course, the market, the primary rule of trading is that anything can happen. Just remember that. And I'm going to pour some trade wisdom on you at the end of the session here about that on request. But overall, just for it to switch around and really get back into the balance above, it's really got to get good news. There's got to be some sort of a deal. And the way things are set up right now, between the U.S. and China, it's going to be very hard for either party to relent. So that's where we stand. Here's how things looked like overnight. We open up. We're responsive immediately on the open, settle in the middle, go sideways, and then sell off a little bit, then go sideways for a while. And then as Europe opens, and you can see that market maker is always active during the European Open. As Europe opens, it's really not able to find a lot of relief. As we zoom in to what liquidity looks like up close, a little bit of liquidity up at the 34, 35 area. Not really promising. I believe that liquidity is just working off of this pullback high. But it looks to me like nobody's really stepping in here and making a big bet at the moment. Both sides are trading. And volume's pretty high, but there's nothing really easy to read. And you know what? There doesn't need to be anything easy to read when there's news. It's just you're having an external force being applied to the market, and that's how the market responds. So overall, just not seeing a firm position by either side at the moment. So it can continue to slide. We are near overnight lows. We just stretched the overnight lows a little bit, and that's just how it rolls. So let me see. Let's take that into our expectations for today. So today, these gray areas are my key areas to participate in the market. If I see a setup, I'm a day trader, so there are a few of them during the day. So here's how things are setting up. I'm expecting more of the same. I don't see why this is going to be any different. Yes, we had the tariffs kick in on Thursday night at midnight U.S. Eastern time, and here the market came in on Friday, and it didn't take it too badly, right? We opened at a pretty decent price, and that's the reason for the high on scenario one. That's the reason for that high pullback and a push through highs. I mean, here these tariffs are kicking in that everybody's terrified with, and yet the market held up pretty good, right? And so overall, I'm expecting more of the same. Not seeing this continue to slide lower. There's a lot that can hold this up. Nothing has changed really. U.S. negotiators have been invited to Beijing, I think they got invited to Beijing for further talks, and this is just a drama that's playing out in front of us. Notice the overnight point of control is right on top of the high volume node from the low on Friday. My expectation this morning is an open auction that immediately pushes lower, somewhat initiative, but I'm looking for it to find a bottom again as we start to squeeze into a major support area at this 2814. This is an MC point of control from a while back. I'm expecting a pushback into the range, a reattempt, and then I'm looking for it to start drifting back up towards 2850, where it's likely to encounter some resistance, and then I'm looking for it to come back up to 2860 at some point today. Again, that doesn't mean we bet it all on a long. It just means that when we see stability in prices, and the way I see stability in prices is just using order flow. What does that look like? It looks like sellers hammering on the bid, trying to push the market lower, and the market's just not giving up these prices. This is an entry. This is an entry long. One second. This is an entry long, and then I start to look for the key areas. I start to look for 28.36 and a quarter, 28.50, 28.40.50, 28.50, and then ultimately this 28.58 area. Okay, so this is what the plan is, and we'll see where it finds a bottom. I can not predict where the bottom will be, but I do expect that the 2814 will likely act like as a magnet, as it often does, as a MC point of control often does. Secondary, we dip down, come back up, and then we are just holding sideways. Barring news, I expect the secondary to just drift up, and if it does, I'm expecting it to push higher than scenario 1 to continue higher. I expect it to be a grind higher because you know what? We're still in a bull market. This isn't that huge a pullback, and buy the dippers are going to be buying dips. So what is everybody advising at the moment? Find your favorite stocks and pick a spot to get long, right? So as the prices stabilize, I expect a grind up on the secondary scenario. Okay. And then the tertiary, or the third scenario, is responsive buying immediately to push into 40, to push into 50, consolidate, attempt into 58, and then get rejected, impulse down, and then start to work itself down towards the low. It could potentially turn down from there. If we turn down on an open test drive lower, which is scenario 4, wow, this is some terrible drawing here. If we turn down lower on scenario 4, in other words, we open, test up, drive down, we could be at 2,800 in the blink of an eye, and then we're going to start looking for bigger areas down below. Now remember, when the market is participating at a higher time frame, the market doesn't care about your daily level, about your floor pivots, about your VWAP from Friday or whatever. Those things don't matter. When a higher time frame comes into the market, they're looking at bigger picture levels, and so should you. So you'll want to keep an eye on the bigger chart and at least pull one up to determine what those big areas might be. So you're looking then at weekly levels and things like that. Now, trader wisdom. Someone asked to talk about using defining statements and how they affect your trading. Example, the market will come back up. The market should do this, that, or the other. I've talked about this extensively for those who've been following for the last 11 years or so. Don't come into the market with your preconceived notions of what things should happen. I see that a lot. Where people say it should test this. We should hold 20. There is no should. If you don't believe that your mind attempts to find those things you're predisposed to believe, then you don't recognize the brain's primary function as a pattern recognition machine. So as we sit there and say it should go down, I don't get why it keeps going up. With all this bad news, it can't go up. If we start to use those kinds of terms, then without you knowing, and there are many, many studies and books on this, without you knowing, your mind will only look for patterns that support your belief, and that's confirmation bias. Don't do that. Use words like could, probably, potentially. Keep it open so that you're flexible to get long or short depending on what information is coming in. If I don't commit linguistically or in my mind to what the market should do or what I want the market to do, then I'm open to whatever comes up and my ego's not tied up in the trade. When you say should or needs to, especially if you had done that publicly, in other words, spoken that to someone else, you are screwed in terms of day trading. You're not able to switch your bias. You're going to want to defend the position you took because now your ego's trading for you, and your ego is just a horrible trader. So always think in possibilities. The market, again, the cardinal rule here is anything can happen in the market. News could come in at any point. Things could change all the time. And it's your belief structure that determines your success or failure in this. It's hard enough as it is. Be smart. Don't sit there and say I need or needs to, or the market has to, or the market always has, or the market does this, or just don't do that. Just think it may, It could. It probably will. It is likely to. Okay? That's it. Good luck, and I'll catch you tomorrow morning. Keep your news feed on. Take care.